Go ahead and unmute, Dave. Like, subscribe, hit that notification button. Don't forget to share this video with your fellow veterans. Good evening, everyone. My name is Dwayne Kimball, owner and founder of KMD89, a VA claims consulting, United States Army veteran, and retired VA rating specialist. I am back and joined this evening with David. David, how we doing?
Good, man. How is life?
Hey, it's good. Just came off vacation. While I was on vacation, I got sick. It was kind of chilly in the Dominican Republic, and I caught a cold for 24 hours. But I'm back. And I'm doing a lot better.
Well, it's not that cold in Chicago. Well, you know what? Actually, today and tomorrow it's going to be in the 50s, but I know that's nothing. That's like winter time by you.
Oh yeah, yeah. It was 46 degrees here in Florida. I was like, started my truck about 5 minutes early to take my son to school, let it warm up. It still was cold. So, all right. So, Dave, before we get started, go ahead and let everybody know what it is you do, your company name, YouTube channel, what type of videos are you putting on YouTube to educate veterans?
Awesome. So my company is called VA Housing Education, where we educate the military community around using the VA home loan across the country. And I also work at Allied First Bank, where I am licensed to do mortgages across the country and its territories as well. And then we work with real estate professionals across the country as well that know how to actually work with veterans, because it is very important when it's like, I mean, in general, right? Having the right team is what gets you to a closing, but also gets you to a closing in a way that benefits you and not the people around you, right? I think that's a big thing for folks. And I'm, also an Army veteran.
All right. Thank you.
I know I know the struggle people go through. I've bought homes places when I've been overseas, and I've dealt with going through that home buying process myself recently, where I'm like, I do this for a living. How can this be a challenge sometimes in the real estate community? So it's fun.
Right. So I noticed you've been putting up a lot of videos here the last 2 or 3 weeks. Normally when I'm either taking my son to school, mainly bringing him back, I'll watch a couple of them. So definitely keep up the good work, putting that information out there. So veterans, if you haven't, go ahead and subscribe to Dave's YouTube channel. And Dave, your YouTube channel name is the same as the business, right?
Yep, VA Housing Education. We try to make it as easy as possible.
All right. So before we get into Dave, do you want to jump into Q&A? Just take a couple of questions before we get into this evening topic, or you just want to go ahead and jump into today's topic?
You know what? Let's go over what we want to talk about with like the cost structure, and then we'll kind of go into the questions, because I think a lot of people out there are wondering or getting into the real estate market or have been in the real estate market, but they want to know, like, did I get taken advantage of? And how do you stop getting taken advantage of? Because, we talked about this ourselves. Like, you looked at your stuff, you're like, wait a second, David, like you were right about this. We're just, we're laughing about it. But the thing is that it happens to veterans every single day. And I'll tell you, Dwayne, is that the number one VA lender in the country does over 4,000 VA transactions a month, and they overcharge veterans a minimum of 2% more in closing costs than the other lenders are out there, and they're just taking advantage of veterans. So this is why I'm such a big advocate for this. This is why we originally got together, on top of me needing some help from you, but which and then just kind of explaining to the people like how to read this stuff so you get educate yourself and empower yourself to make decisions. Because at the end of the day, you got to do what you want to do, but why to get taken advantage of?
Right. So everyone, our topic this evening is going to be, Dave is going to teach you the VA home loan hidden fees that he just talked about, that 2% that you're being charged. Like I got charged multiple times and didn't even know it. And the person on the other line was telling me, "Hey, we're giving you the hookup." Well, they were giving themselves a hookup,
Right.
So think about when, I'm just when you said 4,000 VA home loans a month, the leading lender, and overcharging veterans 2% on
Deal.
each deal. And even though that 2% could be different, but I'm pretty sure we're probably in the millions. And when you span it over
Oh, I
12 months,
mean, no, it's got to be average. Remember, average loan size. Let me just do some quick math here, right? For average loan size is 400,000 across the country.
uh-huh.
Times 4,000. Oh, my calculator can't even math, but it's $32 million.
Wow.
So it's not chump change by
Wow.
any
Okay.
means. So
So what you're going to be talking about today is how to put that 2%, recognize the hidden fees, and keep that 2% in your pocket.
yeah,
Well,
for
not in your
moving
pocket,
costs.
but in the
Yeah.
veteran's pocket. Okay.
Right, right.
All
Because
right.
that's the thing. It's like if you haven't seen it before, or even if you've looked at it, like most of the time people just skim stuff over. And because I'll ask, like, did you look at the closing cost? And they'll be like, well, no, I just signed all the documents, because a lot of people are just happy to buy a house, right? And we see it all the time too. And we're like, hey, let's do a timeout here. Let's first go through everything so you understand what you're doing, because it's exciting buying a place, but at the same
Yeah.
time, you got to know where you stand.
Yeah. Okay. So you want me to go ahead and pull up the
Yep.
closing disclosure?
Well, it'll be a loan estimate. So I'm going to kind of explain the important parts of it. And like what Dwayne was saying is kind of where the hidden piece to this is. So when you first apply for a home loan, a lender can give you what's called a loan estimate, and it's an estimate of the fees. Now, some of the fees, once they've been disclosed to you, aren't going to change. And then other fees will change because they're third party costs, and lenders really don't know what the cost is going to be. But I'm going to point out a couple things that you definitely need to know, right? The sale price. You need to know the loan terms, which most of the time, everyone out there is getting 30-year mortgages. I just did a recent video about comparing adjustable rate mortgages against fixed rates. And I always suggest that you guys go with a fixed rate, especially right now in this volatile market. This will let you know it's a purchase fixed rate. And then it'll tell you, are you actually getting a VA home loan? And when the lender tells you they lock the loan, it'll also tell you here if it's locked and when it's locked to. Dwayne, people all the time will be like, oh, yeah, we locked your loan. And then all of a sudden it's not locked. And then the rates go up. And now all of a sudden they're paying more money on their mortgage payment, which most people are budgeting for a monthly basis. Okay. The loan amount's going to be here. It should mirror the sales price if you've been listening to Dwayne's videos on VA disability, because if you have a 10% or higher disability rating, you don't pay a funding fee. Otherwise, the loan amount's going to be higher than the sale price. And I'm going to cover in a little bit, because some people had questions. Can you get the VA funding fee reimbursed after you've closed? So that would be a good one. This is going to show you your interest rate. None of these are going to change. Your principal and interest payment, that's not going to change. No prepayment penalties on VA loans, meaning if you want to pay off your mortgage sooner, it's okay. You can do that. They can't penalize you. And there's no balloon payments, meaning like, hey, it's due in 5 years. Or like a mortgage is over 30 years, but due in 5. They don't do that with VA loans. Okay. You're going to have your principal and interest and taxes, whatever your taxes and insurance are, they're going to be included in your property taxes. Now, note, if you have a disability rating that qualifies you from being exempt from paying property taxes, then you can actually qualify without property taxes. It's something that's pretty cool. We do that all the time. And this is where you're going to have your estimated closing costs and estimated cash to close. So let's kind of go through where most of these things are going to be hidden. So this section here where it talks about loan costs, this is where a lot of veterans get charged a 1% origination fee because the VA allows it. So if you're buying a $500,000 property, they charge you a $5,000 in they're junk. I just be honest with you, they're just junk fees. But I see it all the time. It's not like, oh, once in a while, because again, the top lender in the country is charging these crazy fees. If you laugh at their commercials, you know who they are. It's the biggest ones. I mean, they're always marketing to you. And another thing is that there's discount points. Now, discount points is where you buy down the interest rate from the current market rate. So if let's say the rate's 6.5, but that's like the market rate, but you want to get a 6%. Those are discount points. The challenge here again is that the big companies have such high margins that not only do they charge you the origination fee, they charge you 2 discount points. And then another lender could basically give you the same rate that you're buying down basically almost 3 points for, let's say, a half a point. It's crazy. I mean, we see it day in, day out. Thanks, Dwayne, to your viewers, because they reach out and they're like, "Can you take a look at this?" And I'm like, "Man, they're taking you to the cleaners." Especially new construction. Let's not even get, that's like a whole separate episode. Just because we've talked about that, I think last time. The builders give you a credit, but they just charge you the money that they give back to themselves, so you get no credit for the other costs that you need money for. So, like, and I'm passionate about this because I just see it so often that I don't get it, right? So the rest
Dave,
of the,
I'm sorry, before you move forward.
Yeah.
Section A, the origination charges. You
Right.
said the VA allows 1%. So regardless, the veteran is being charged that $5,000 origination fee
For that
charge,
example.
which is going to go to the lender, in the VA saying, yeah, you can go ahead and charge the vet that, and there's nothing the vet can do about it, correct?
So it depends on the lender. Like for us, we don't charge any fees.
Okay. All right. Okay.
So there's no origination fees. If you want to buy down the rate, you buy it down. Because typically, like, mortgage companies would charge like a $1,500-$1,600 processing and underwriting fee, but you don't have to be charged that, right? Because the challenge with with this piece is if you buy down rates, depending on how much you buy down, if rates drop, you could get it for free instead of paying a bunch of money. Because remember, you can't write off discount points, but you can write off interest. My disclaimer: talk to a CPA or accountant. But I do it. You do it. I do it. Like anybody that owns a home, you do it, right? You write off the interest on your property. So, where are rates going to go over the next 2 years? Well, in December, they dropped. When we did our video, rates dropped like crazy. We did one in December, right before Christmas, right? It was a Christmas present to everyone. And then, last 2 weeks ago, they went up. But still, yeah.
And the reason why I asked that question, David, is because let's just say they have one of these loan estimates, right?
Yep.
And they went through a big box lender and they see this video and see us talking about, and they pull this form and they see this origination charge. And let's just say it's, instead of 1%, an example you gave, let's just say it's 2%, just for an example. And it's $10,000. They can actually contact you and say, hey, Dave, I want to use you instead. And you won't charge them that $10,000.
Correct. Yep.
Okay.
We're going to lay down the options, because I think a lot of times nobody spends the time to explain what the fees are and how they work, because you know how it goes. If you tell somebody something or you bring their attention to it, all of a sudden they kind of be like, whoa, why am I doing this? Right. Mm-hmm. And that's what we want to do with this. So the origination fee is allowed by the VA for lenders to charge 1%. It is not necessary. Discount points can make sense, but the big banks charge such a high margins that you can go somewhere else and get it way cheaper. Okay. Those like services you cannot shop for, like title insurance. That's something that the lender is either you're gonna pick one, or the servicer or like the sellers are gonna pick. Same thing here. Services you can shop for, they might have like a termite inspection, or they might have something else in here. Then you have government fees. Those are going to be standardized across any lender that you use, because it's whatever it costs to buy a property. I'd say Florida's you pay a higher premium because you don't pay state taxes, so they get you on real estate taxes. That's why sometimes too it's a little tricky on refinances. Prepaids, that's like your mortgage insurance. If you have taxes included in your mortgage. You'll have that. Most of the time, VA loans do require you to have property taxes in your monthly payment unless you're service connected. Okay. And then the initial escrow, that's just setting up taxes and insurance. So that pretty much can all change. The transfer to fees, government recording fees cannot change once they've been disclosed. So keep that in mind. That fee will never change. These other fees, F, G, H, B, C, all those numbers can also change because it all depends on the property. But those origination fees, if the loan is locked, will not change. Okay. That's why it's so important to look at those numbers so you know what you're actually being charged.
Wow. I'm still stuck on that origination charge. I'm like,
I don't know why they say that the origination fees to help lenders with the costs of doing the loan, but I'm like, it's again, like if you look at the big companies, they're spending insane amounts of money on a monthly basis just on hiring actors, comedians to do those awesome commercials. They're not cheap. So a lot of that money goes towards things like that and higher operational costs as well. So that's why lenders will charge all these additional fees. But again, you really don't need to do that.
okay, so I'm looking at mine here.
You
Loan
shouldn't have
costs.
done it.
Yeah, I got it right here. Origination charges, percent of loan amount, points, $1,595.
Origination fees?
Origination fee.
Yeah.
Wow.
And that's something you didn't have to pay. But the thing is, too, like I said, Dwayne, is like, I would say, most of America doesn't sit around with a bunch of extra cash that just says like, oh, I could blow 10,000 and it's no big deal. And the challenge is that we look at a lot of these estimates. And again, like Dwayne says, like in the description, you can schedule a call with us. We'll go through the loan estimate and I'll tell you what, if it's good to go, we'll tell you it's good to go. We don't badger anybody out there. We just tell you how it is. If it's good, it's good. If we can do better, then why wouldn't you want to save money? Because you have things with home ownership, right? You have to move, right? And we see too many times, Dwayne, where people wipe out their entire life savings to buy a house and they didn't have to.
Right, right. And, it's the same thing on the compensation side.
Yeah.
Veterans will say, "Oh, I was looking at some comments today, and they're like, oh, go get a VSO. Your VSO should be able to tell you." No, they say go talk to a VSO. A VSO should be able to tell you if your disability is static or not. That is not true. If that is not your VSO, they do not have access to VBMS, so they cannot look. They cannot look at it. So. And then they'll say, well, go get a lawyer. And then the vet says, well, a lawyer told me to call them back when everything is denied, if it's denied, because a lawyer don't want to spend the time to dig into it because they don't get paid to do that. They get paid when you get denied and then they go to appeal and then they're going to drag it out for you because they're not going to take 20% of 30-day back pay. They want a 12 or 14-month back pay to get 20%. So it's like, who do you go and talk to? And you just pointed out something, that $1,595, $1,600. I could have took that and, bought a new refrigerator for my house or put carpet in or something where it didn't have to come out of my W-2 income. So it's a lot of good information. And you got, vets have someone like yourself that they can trust and say, and call you up and say, Dave, hey, what does this look like? And you're going to tell them, hey, I think you're in a good spot, go ahead. Or if not, this is what we can do for you differently.
Right. No, I agree with you.
Wow.
Yeah. So it's like definitely the whole education piece. Yeah. And I think I saw that how do you find the status if you're static or not on your disability? I was like, oh man, that's awesome. Yeah. Cause I was wondering too, looking at my stuff and I'm like, yeah, like where do you find that info? So, but that's awesome.
Yeah.
Yeah. Well, I can answer some of the questions we could pop out of this because that's basically going to be like the key piece to all of this, right? So I know that loan estimate. Look at it. Closing disclosure. Look at it. Oh, you know what? One thing I will mention before we kind of go on is that when can you switch lenders? Because that's something that we always get
Mm,
too. So one thing is important to note that the VA does not do mortgages. I cannot express how this one company, everyone thinks that the VA, they're like, oh, well, the VA gave me the mortgage. The VA gave me this estimate. No, they didn't. And that's how they get you. That's how they get you.
yeah.
Um, every loan that VA home loan you get is going to be from a private lender. Okay. That's going to be the main thing that you're going to get it. They're all going to be a little bit different. So don't get tricked by that. After you buy a home, yes, you're going to get a letter from the VA, because I was surprised. Like I got one like 2 weeks after I closed. They said, "Hey, David, congratulations for using the VA home loan. This is how much entitlement you used on your VA home loan." I'm like, okay, that's pretty cool, because it's a good way also to avoid if somebody used your benefits and you didn't know it. So it prevents fraud, because that can still
Mm.
happen today. So just kind of just definitely be aware of that. But let's answer our first question.
Okay. So before we get into
Yeah.
that first
Oh,
question, everyone, I know we probably have some people come in a little bit later. Make sure you go out to David's YouTube channel, VA Housing Education. He has tons of videos. I know the last couple of weeks he's been putting them up, like I think like every other day, and a lot of good information. So things that we talk about here monthly, you can go back, watch this video, but definitely go to his channel. Make sure you subscribe, hit that notification button. So as soon as he pops up a video, you can watch it. And then when you catch us here, ask us questions or just give him a call. All right. So we're going to go ahead and first question.
all
You
right.
can see that, right?
Yeah, I can see it. Yeah. So just found out that I inherited a house that needs a lot of work. Can I use my VA home loan to make improvements to the house? So so if it's a primary residence, yes, you can do what's called a VA renovation loan. Okay. You can have multiple VA home loans at the same time, but this will have to be your primary residence in order to use the VA home loan. If you have equity in the property, it could make sense, and also depending on how much work is needed, right? Because if it's 20 or 30,000, it might be better to get a personal loan than try to go get a regular mortgage, right? It's going to depend on that balance, because all these things have costs associated with them. And depending on how your financial picture looks, it's going to determine how that structure needs to happen. Because you have FHA 203K loans you can do, which are also going to be somewhat limited, like a VA renovation loans. But then you also have what's called a home style loan from a conventional loan, which really, it even allows you to put a built-in barbecue in your backyard. Dwayne, I love yours. But and a pool. You can do that with with the home style loan, because it gives you a lot of flexibility, right? And if it's an investment property, there's also challenges with that, because there's a lot more restrictions. Like you can't even use a VA loan or a FHA loan on an investment property. So again, depending on the value of the property, what you're trying to do with it, it can or can't make sense, right? I think that's a good one to jump on a call. And so I can learn the whole picture, and then we can let you know, like, well, this is how you can structure it. Because there's always those things you can massage, right? It just all really depends.
All right. Okay. Moving right along.
Let's see. Homeowner buys a home. Years later, she gets respected. Will it be reimbursed? All right. This is a good one. So the funding fee. Oh, let me see. Dwayne, actually, this is like for both of us, because I know that if you're on active duty and you get discharged, when you get discharged from your service and you get your service connected disability, when you're getting out, your effective date for the VA disability is your discharge date, correct?
The date after
The
this.
day after. Okay.
Yeah.
And then when you're out of the service for a while, and then you file your intent to file, right? Then you wait a year, and then you file your disability, and then you get it another year later. They typically will backdate it to the original intent to file. Is that correct?
Yes.
Okay. So to answer your question, it depends on when you buy your home and what the effective date of your VA disability rating is going to be. That's going to be the key. Because if you, let's say, filed your intent to file in November, let's say last year, November, you bought a home today, your VA still, you haven't even submitted everything that you need to in order to even get your rating. But let's say you buy a place today, you get charged a funding fee. A year and a half later, you get a final decision and it's backdated till November of last year, but you're buying right now in February. Then at that point, you can get a refund of your VA funding fee. That's the important part of that. If you already own the home and you closed on it after you filed your effective date for your disability, you do not get that money back. But you do also get your VA disability. Like if you qualify for no property taxes, you'll still get that. You just have to file with the county. The other part to that is that no matter what VA home, no matter what loan product you use, or you don't have a loan, don't have a loan on the property, then you can still apply for your disability rating for your property taxes to be waived. Okay, a lot of people don't realize that. Not only that, you can have a relative like a parent or a sister, or brother, whatever, that lives with you. And they have a service connection that qualifies for a property tax exemption. They can actually go on title with you on the house and you get that exemption. There's free money out there, people.
Yeah.
I mean, I'm trying to play the lottery. I'm not really doing well with that, but
yeah. But that's another thing about the intent to file. I always tell veterans, whether they decide to work, with my company or VSO lawyer or whomever, make sure you get that intent to file in. Because what'll happen, and just think about this scenario, Dave. Let's say a veteran puts an intent to file in a year ago. Let's say the 21st of February last year is the intent to file date. They put their first claim in. They put the claim in today, February 20th. So they just made it by one day, right? It takes the VA, we're going to go extreme here, right? It takes the VA a year to make a decision.
Yep.
Okay, so now we're at 2 years. Then the vet has a year to do something. High-level review, supplemental claim. They do a high-level review, 3 years, a year from the notification. So now we're at 3 years. And it takes, let's say, another 6 months for the high-level review, and they win.
Hallelujah.
The effective date goes back 3.5 years. So using your scenario, they're in the process of buying that house, 2 years into the claim process. Now that effective date shows they were service connected a year and a half, whatever, before they, started to purchase that home. So that's definitely another reason that, if you're thinking about VA claims process, then intent to file is so important. Wow.
Well, yeah. And another thing with that too, like what happened to me, and it actually happens to a lot, and maybe you could explain this to me, is that when you're going, like you do your initial DBQs or your CMP exams, they'll assign you like, oh, here's 10%. Here's like a little nugget just to get you through. But then you can also, because, if they give you zeros and then you're going to the high level review, okay, then you're really waiting that 3.5 years. But let's say you start the process, do a CMP exam, and then boom, you get a 10% rating just to hold you over. Then you can already use that 10% to get the funding fee waived.
Wow.
So just keep that in mind, because like that is a tricky one, because I actually had one of your folks is buying a place right now that connected, and she got her disability while I was on the phone with her. I'm like, have you used the mobile app? She's like, the mobile app. And I'm like, listen, you need to use the mobile app. And then she looked when we're on the phone, looked, she's like, I just got a 90% rating. Because, like that's the thing. Like, I know we're talking about a lot of loan stuff, but that app tells you before you know. Like, yeah. I think it's crazy.
I have it on my phone. I never open it. But
oh, really?
It's on my phone. But I've heard people talk about the app and how good it is.
Yeah.
Okay. Barbosa, can a buddy statement cover more than one claim if they serve with me for years. Yes, it could, but I wouldn't recommend it. If you're claiming 5 different conditions, right? If you're claiming 5 different conditions, if somebody is talking about one particular condition or all 5, I would have 5 different statements because you're going to confuse the heck out of that VA employee. Now, it's more paperwork, short, direct, and to the point. Okay. So if you have multiple duty locations with this individual, might not be a bad idea for that individual to put, I serve with such and such, Letwood Barracks, Schweinfurt, Germany, 5th Battalion, 41st Field Artillery, 3rd Infantry Division. I go to your 201 file. Yep. Because they're going to give you the date that you got there and the date that you left. And then I'm going to go to that person's records, look at their 201 file. It's going to give them the date. It's going to give me the date that they got there and the date that they left. That literally takes me about 5 minutes.
Wow.
If you don't do that, now I got to go dig. And that could take anywhere between 5, 35, 40 minutes. And if I get tired, I'm going to punt your claim to the VA cloud. And that's like nowhere. Okay. Because it's taking too much time and I'm on a quota. And I'm serious. People don't understand that. You know, people be like, Dwayne, you don't know what you're talking about. I'm like, I used to rate. I've seen it. 9 times out of 10, I didn't seen it. Okay. Trust me. You don't want to end up in that cloud. Okay. Here we go, Dave.
I need to know if I should get a V loan for my first home with my wife. So that's kind of an open-ended question because everyone's financial picture is a little bit different. The VA home loan in general is the best loan that's out there. You have no money down, no private mortgage insurance. You have favorable interest rates, looser qualification standards. You have, you could do things with bad credit. It allows for higher debt to income ratios. They actually kind of look at residual, but so it's definitely an awesome product. So if you guys are not looking to have like 30 not 30 properties, but if you're trying to have multiple properties and stagger loan products, then the VA home loan is phenomenal to use. But again, it's just going to really depend on your financial picture. And I just did a video recently about like having spouses on the mortgage as well. Sometimes it makes sense. Sometimes it doesn't. It really depends on their credit score and where in the country you're buying. Because there's community property states as well, which also make things a little bit more complicated. But that's more of a question that definitely happy to answer on a one-on-one call.
Okay. All right. I think you may have answered this or...
Yeah, can you explain what warrants the VA funding fee refund only for veterans who buy homes? No, so the funding fee refund. So the VA charges a fee to use the VA home loan. It's the only fee in a purchase transaction that can be rolled into the mortgage. Okay. If you have a service-connected disability of 10% or more, the VA funding fee is waived. So one of the questions was, how does the VA backdate the funding fee refund? So as long as your effective date is before your purchase date, you should be getting a refund. You need to call the VA.
The service connected effective date, service connection effective date.
Correct. Service
before
connection.
the purchase date. Right.
Mm-hmm. Yeah. So as long as you have that, otherwise that fee is rolled in. And if you use the VA loan the first time, it's like with 100% financing, it's like 2.15. And then after that, 100% financing is 3.15. So that's a lot of money, right? You buy a $500,000 place. That's $17,500 they're charging you in fees. Yeah. So just be really careful with. That's why, listen, if you serve, there's probably something wrong with you. Just
ringing in the ears. That's 10%
it's
right there.
Yeah.
All right.
So actually, this is some good questions. If I have 20% down payment, would it be more seamless for a conventional loan? It depends. I just be honest with you. We have people that this scenario comes up, and I'll be like, "Man, your financial situation doesn't allow for you to do a VA loan. For a conventional loan, you have to do a VA loan just because of how loose the standards are." I would compare the interest rate, and if you don't, if you have to pay the funding fee, those are two things that could be a factor. But I'll tell you that even looking at these rates with 20% down, it's still cheaper by, on average, 0.5% lower to go with the VA loan. Okay, especially if you don't have a funding fee, then it's just a no brainer to use the VA loan. I think that a lot of times when people are looking at using what loan product to use, for I would say from a real estate perspective, that the VA loan is really easy loan product. Okay, it's smooth. It's normally 21 to 25 days on average, unless you live in a rural area. Then it does take longer because the appraisers don't come out as fast, right? It took me like 4 months to close in the boonies when I bought property up in North Carolina. It was mind blowing. Somebody from the city slicker out there, like, why can't we get this done faster?
Yeah.
But yeah, so it's kind of crazy on that. And so you have to look at the whole picture of that. So if the property is maybe not in the best condition and you feel that, hey, this is absolutely not going to pass a VA appraisal and you just don't want any hassle, okay, that could be a factor. But in general, again, if you have the disability the VA funding fee waiver, then it's definitely an awesome product to use.
Wow. Gonna keep it going here. Next question.
All right, we got. So remember when we started? It was all questions for you, and I was lucky just to get
Oh
one.
yeah.
Yeah,
How
it's
does the
just-
tides turn, huh?
yeah, that's how we start. All right, so who benefits from an assumable VA loan, the seller or the buyer? Well, that is a great question. Only the buyer. And so for the veterans out there that don't know what an assumption is, let me spend like a couple minutes on there because it is very important. All VA loans are assumable. So if, let's say Dwayne has a $400,000, let's say he bought his house for $500,000 and he's got a 2% interest rate and his mortgage balance is 450. And I come in and say, you know what, Dwayne, can I have your VA home loan and your house? And Dwayne is generous enough to say, David, you shall taketh this house and you can actually take my VA home loan with it. And basically, I can put my entitlement on his VA home loan. He can free his VA loan up. And I just give him the cash difference between the purchase price and the assumption. Okay. It's a phenomenal deal. For me, it would be zero for Dwayne because it takes up to 6 months to close on an assumable mortgage. Dwayne wouldn't be able to buy another house for up to 90 days to get his entitlement back. So there's definitely downsides to it. So the really only the buyers benefit from this because people do them because, like, let's say a property is hard to sell and you have time on your hands. Well, then it makes sense to do an assumable mortgage, right? But the challenge is a lot of people don't have enough cash to put down. Veterans that have multiple VA loans must qualify for the original amount of the assumption. So if you bought a place for 800,000 and your mortgage balance is 400,000, I have to have enough entitlement to cover $800,000, even though the balance is 400. And that's another good point I want to talk about quickly, is that if your original mortgage balance was 500,000 and it's 300,000 now, you have 500,000 locked up of your benefits. If you did an interest rate reduction refinance loan at the 300,000, you still have 500,000 locked in. If you paid off your house, you still have 500,000 locked in. If you refinanced it into a conventional loan, you still have 500,000 locked in. So you got to know how that works. Because we have that all the time when people will get midway through a transaction and then they end up, lender doesn't know, and then they just end up getting denied.
Mm. Wow.
I know that was a lot. I kind of went on a rant there. Sorry.
Just stuck that was stuck with me at 500,000. 500,000.
I know.
Okay, D Skills, thank you all for these streams. Hey, definitely appreciate it. Like Dave said earlier, he has a passion for his VA home loan. We connected, because he saw I had a passion for VA compensation, and we decided to team up and give you guys this information. And this is something that you these videos you can watch for free. On David's channel, you can watch the videos for free about VA home loans. You can contact him. You can watch my videos on my YouTube channel for free, and you can actually go through this process yourself. the VA claims process yourself. You just got to invest your time. Now, for us, for me, if you get to the point where you need someone to educate you, then we're here for you. But a lot of people have been telling me, Dwayne, I got your book, I read it, I've been following you on YouTube. I went from nothing to 90%, and now I'm stuck. And they never talked to me on the phone. Okay, so what we're putting out here works. And again, like David said, I was looking at this closure, almost $1,600 that I lost. Thought I knew what I was doing. So you might want to give him a call, okay? Okay, here we go. Next question.
Oh yeah, well thank you. I know who this is.
Oh, okay. All right.
Yeah, thanks for working with us. So once you've already gone to the home purchase, it's already yes. So the thing is that the only time that you that's what I forgot to mention earlier is when can you actually switch lenders in the home buying process, and it's basically up to about 2 weeks before closing. You can change lenders. It's going to be tight, but it can be done because we do it all the time. But that's why you got to do your homework ahead of time as much as you can. But sometimes it's hard, right? It's like we do videos like this because we want to promote to the veteran community to save money, educate themselves. So sometimes it happens kind of at a later stage, and typically sellers are going to be okay with like, hey, let's delay it a week because we want to save the veterans some money. Okay, but yes, once you've signed at closing, c'est la vie.
That's it.
That's it. So unless it's a refinance, that's the only time on a primary residence is the only time that once you've signed, no c'est la vie. You have 3 business days to cancel that loan.
Wow.
So that's something, yeah. So we
I
don't
didn't know
really,
that.
yeah. So it's called the right of rescission. So it's only on a primary residence refinance. It's the only time where you can do like take backsies. You're like, I take that back. So
wow.
But that's the only time. And then yeah, a lot of veterans utilize actually Dwayne, a lot of like we've helped a lot of people do cash out refinances to be able to pay down debts, leverage the VA loan. Yes, rates are higher, but when you look at, let's say, an overall credit mix, it still ends up saving people thousands of dollars a month by leveraging equity in their property. I think it's scary for people because, like, well, rates have gone up, but man, it can change your life.
Yeah.
For sure. And you can still do a HELOC, a home equity line of credit on top of a VA loan. So keep that in mind. A home style. What is a home? I know we touched on it before. So a home style loan is a conventional renovation loan. It's a lot better than using a 203K loan, which is an FHA renovation loan, because you need like a HUD consultant. I've seen 2 people just get taken to the cleaners on it, so I don't really recommend them too much. But if you need it, you get it. Same thing with the VA rehab renovation loans. The same thing, but you're also going to be restricted and limited to normally 50,000, or you have to get the work done in 4 months, which is hard. So the home style renovation loan is a conventional renovation product that gives you a lot of flexibility to do what you want with the property. Like I said, it even allows you to do a pool and a built-in barbecue if you wanted to, as long as the neighborhood supports it.
Right. So we had something for Dito Girl. Not so much a question, but saying she'll be in contact with you soon.
I appreciate it.
So I'm going to hold you to that, Dito Girl. Dave's going to let me know if you called him.
I like it. Why wouldn't you use the VA loan? It's definitely a no-brainer. But I'll tell you this. I'm with you that it's a no-brainer to use it. But for the people that are out there that want to own multiple properties and they want to leverage loan products out there to be able to maximize and have a small real estate empire, then it sometimes makes sense to leverage other loan products, right? Because I'll give you a quick example on how you could basically get 3 properties in 1 year to buy a place. Okay. You can do a 4-unit property with a 5% down payment with a conventional loan. They just rolled that out. Okay. You can move across town 50 miles out. You could buy another multifamily 4-unit, do an FHA loan, do 3.5% down. Okay, so not much money you're putting down, but you're gaining 8 income properties from that. And then you have the third loan, which is going to be your VA home loan, which they really don't care. As long as you certify you're living in it, you could basically buy another 4-unit building. So I just had someone do that last year. It was mind blowing because they accumulated like almost $3 million of properties and a crazy amount of income. So everything was paid for. They didn't have anything. Now, but keep in mind that you do have to have reserves, and you can't just be going in like at like you're barely not I don't want to be negative. Like if you budget well, right? You have money saved in case emergencies come up. You can actually build an like a really quick fast empire with leveraging like a TSP account, 401k, money, cash on hand, and get a couple properties relatively quick. So that's what I'm saying. Like sometimes there's people out there that are like, "Can I do some stuff with these loans?"
Yep.
And yes, you can.
My wife and I will be scheduling a call with you, Dave, real soon.
That's awesome. That's what I'm
Right?
saying. Keep using the VA loan, unlimited times.
Be used in a foreign country. I heard you mention that earlier when you said territories.
Yeah, it's gonna be like Puerto Rico is a territory of the United States. So the territories can you can use the VA home loan in there, but you can't like we have guys we have a lot of people that like are stationed in Germany. They're like, well, can I buy a house in Germany? You can't. It has to be a territory of the United States. Don't quiz me on which ones are there.
Thank you for
Thank you.
right. Can't really rating, do you think?
So Will, another
Yeah.
good question. Rates have gone up a little bit. Okay. So this is like an educational disclaimer, right? This is for educational purposes only because everyone's financial picture is different and we're not talking about APRs. Okay. Right now we're seeing rates realistically are they got up back up to about 7%.
Hmm.
So
Is that for refi, new construction, or
all of it.
okay?
So remember back in December when we were like rates dropped down, they were like 5.75.
Mm.
And the thing is that a lot of times, like that's why we did like an emergency video. We're like,
Yeah,
guys, if
yeah.
you're if you're like I called Dwayne, I'm like, listen, let's jump on that. Like, let's do something right now. Like things are happening. And then when people wait, like we had people like sometimes they're like, well, I'm gonna wait for rates to drop. Well, they went up, and it's an election year. I think that the Fed, somebody from the went on 60 Minutes 2 weeks ago. That's what changed everything. Rates dropped like 2 weeks ago on a Friday back to 5.75. I was like, man, I can't believe how much rates dropped. Guy went on TV and basically said not good things about what's going to happen to America's debt. And basically Monday morning you wake up and rates just went up like 1.25%. So
Mm.
that's how things a lot of times change so fast. And I know we've been talking about this is the best, worst time to buy. I say that I did it myself and I bought it in December. I bought a place on Thursday. On Friday, the rates dropped 0.5%. I do this every day. It's impossible to know what's going to
Right.
happen. What you guys should focus on is can I afford my payment? Because
Yeah.
rates are cyclical. They'll drop. This is like standards issue stuff, right? Even if values drop, oh, they recover like they did back in 2008. We're not going to have that again because we're not doing like made up loans. Like literally, like you just make up stuff and you get a loan. Right now, everything's been verified. So the foreclosure rates are at an all-time low. And we have the largest transfer of wealth because of baby boomers passing away over the next 30 years. A lot of people have sitting on equity and they have money. I know there's a long answer to that, but yeah. Ooh, yes, you can. That's a good one. So you can actually turn a VA home loan into a rental property and use the VA loan again.
Say it
And
again, Dave. Say it again.
so you can actually, if you have a VA home loan and you rent out your property, you can use the VA loan again, and you can turn your VA loan into an investment property and buy it and buy another VA home loan, buy another property with a VA loan. So
Okay.
it's awesome. And the cool thing is that you can actually, while you're living in the current place, you can buy the other place without even having the renter in there and offset your mortgage payment as if you had a renter. It's only the only loan product you can do that with.
Mm.
This is okay. I'll buy a condo in Florida, but realtors are telling me that I can only buy from a condo listed on the VA. Too short, 1968. I'm here to tell you today on Dwayne's show, okay, that 100% you can buy literally any single condo that you want, any single one, VA approved, VA denied, or not approved at all. And do you know why? It's because you can get a waiver in any condo. So if you find a condo, again, I'm going to reiterate this because people are blown away by this. It could be denied by the VA. Who cares? Just resubmit the documents, update the denial, and submit a waiver. Just like that. I know I made it sound really easy, but like it's literally that easy. And we do them all the time, by the way. So if you guys, again, if you want to schedule a call, and if you can't find a realtor that can actually help you through that, we'll connect you with someone that knows how to do it.
And if you check in the excuse me, check in check in the description section of this video, you'll find all of David's contact information where you can schedule. So you can schedule with him get on his calendar and ask some additional questions, or if you're ready to move forward with a refi or new purchase or whatever, he can let you know what you need to do to move forward. Here we go.
All right, Gabe, can you explain a little more depth about renting and purchasing another home? Yeah, let me well, there's this part is like multiple components to it, right? Depends on how much entitlement you have left. Because remember, in the general United States, you have $766,550 worth of total VA home loans before you have to put a down payment and anything over that. Okay. If you go to high balance areas, it's like $1,149,825, like right around there. So it just really depends on where you're looking to purchase, is going to determine how much entitlement you have. When you buy, if you're in any type of loan actually, and you're buying another property and it's going to be your primary residence and you're using the VA home loan, you can actually offset your mortgage payment on a departing residence without a lease. All that needs to happen is what's called a competitive market analysis. So a realtor gives you one saying, yes, it's a strong rental market. You don't even need a lease to offset the payment. As long as you have enough entitlement, you can buy another property. So, and if some, like for something like that, Fedora, like that'd be something you definitely want to schedule a call with us, because then we can walk you through it. Because sometimes I think, because like, listen, I could talk for like 8 hours. We could do a live stream, Dwayne, you and I, 8 hours. It's going to be awesome.
Yeah.
But it's just so much information to take in. And then not everyone's situation is going to apply, right? So sometimes, like, you want to read that 616-page VA handbook, be my guest, but then you're going to have to know how to apply it to your situation. And that's where, like, we're definitely wizards and pros at this. Like, we do this day in, day out. And then if you schedule, you can just talk to us for like 5 minutes, and I'll be like, oh, this is what's happening. This is how you're going to do it. This is how we, this is how we can structure it. And so it just takes the guesswork out of that. And I know somebody, Dwayne, had a question about a bankruptcy.
Did I miss that? Hold on,
yeah, it was.
Okay, here we go.
Yep. So typically on a bankruptcy, they're just looking 2 years out from a bankruptcy. So Chapter 7 is 2 years, and typically Chapter 13 is going to be 12 months. And you have to have all your on-time, you have to have 12 months of on-time payments. It's definitely a process. You also have to reestablish credit. So especially like after Chapter 7, which Chapter 7 is you liquidate all your debt. And then you need to have some type of fresh start. You need to get at least 2 credit cards to show you've reestablished. If you have a Chapter 13, make sure you're making all your payments on time. And then you don't not like relapse. Like you just can't go back into that showing that pattern. Because if you show that pattern, the VA is going to look at it and go like, you can't buy another place for another 12 months. So, and again, I think you should buy sooner than later because values. I mean, right now we're already in bidding wars on properties, and this is February. But that's why I was saying December and January, you really don't see that.
Okay. All right. Oh, we had another question pop up here.
Good one. So hard is to get a V loan on a 3 or 4 unit building with or without existing renters in other units. So as long as yes, you intend to occupy one of the units, lenders really don't know if all the units are rented out or not unless you tell them in a contract that all the units are rented out. Typically, we never even see that. It's hey, all the whole building is rented out or not, because there's 2 ways that you qualify for buying a multifamily. The first way is that you can afford the entire payment yourself. You don't need to worry about offsetting any of the mortgage payment by the tenants that are living there. That's pretty straightforward. If you are buying a multifamily and you want to use the proposed market rent for each unit, not actual, the proposed market rent, okay, then you need to have 6 months of principal, interest, taxes as a reserve, which could include a 401k, money market, TSP, checking money, savings checking. You can't get reserves as a gift fund. So if it's 5,000, you're going to need 5 times 5,000 or 6 times 5,000. That's how much you're going to need in reserves to use that rental income. And then you're going to also have to hire a property management company. So it's not very hard to buy a multifamily with a VA loan. Yeah, I think it's awesome. It's the only loan. And then think about this too. This should be like a song. No limit on VA home loans if you don't have an outstanding VA home loan. So if you want to buy a $4 million multifamily and put no money down, you can do it. We have people buying $2.5, $3 million 4-unit buildings in Chicago, and they pay a $500 a month mortgage payment because the rents on those buildings are so high that they're actually able to get high-end properties. But because they saved a lot of money and they have the reserves, they're able to make these kind of things happen. And they're good investments, right? So again, this is all things to keep in mind. It's really easy also to buy a multifamily and then buy a single family home. So that's another route people go, right?
Okay. We'll take a couple more questions. We got about 2 minutes left. Excuse me.
It's thunder.
I want to get this. Yeah.
No. Oh, that's a good question. Yeah, there is no limit. You could be 104 and still get a 30-year mortgage. There's no discrimination. Or yeah, they can't tell you can't do it. Nope. No, you don't have to eliminate all your debt. It's just going to depend on your qualification aspects, right? If you're eligible for the V loan, then it's worth applying to seeing like what you can do, especially if you rent. The mortgage is the same that you rent. You save a lot because of the interest deductions that you get when you buy.
Okay. All right.
So it's a good question.
Yeah. So we're going to go ahead and wrap it up. We're right upon an hour. Dave, it was good connecting this evening. Every time we talk, I learn something. I learned 2 things. 2 things tonight. 2. But actually 3. Actually 3. And it's got my head turning. But going back to the origination charge, people, if you're in the process of refinancing home loan, get this loan estimate. I was looking at mine because Dave and I talked about this, I think about a week ago, and I was like, okay, let me look at this. $1,600. They got me. They got me. I'm not going to say the first name, but the last name is Depot. All right. They got me.
I think they went out of business actually. And then while answering one question that just popped up, yes, you can. A VA disability does qualify as income, and you can use it immediately upon receiving it to qualify for a home loan.
There it is. So, Dave, do you got any other live streams coming up? I know you pop up sometime. I see you on LinkedIn. You plan on going live on your channel or anything soon? If anybody wants to catch you on a different platform.
Yeah, well, in 2 days we're doing one on how to PCS and build wealth through real estate. So that one we're gonna kind of talk about how to like maximize different loan products that are out there to kind of for people that this is more for active duty folks, but I'm sure you have a lot of active duty folks that are on here
Mhm.
because I just did a TAPS class and I was talking about you. I'm like, listen, as you're getting out, like you really need to know how to file and document stuff because too many times, in the military, you're like, oh, just suck it up. I'm not gonna go to sick call. And then it's like
Yeah.
you don't get anything documented. So I was telling these guys, I'm like, make sure that you're doing this. But but yeah, definitely the PCS process. And then next month we're gonna flip it and we're gonna be doing education for people around first time filing for disability. So we're gonna kind of do kind of disability awareness next month, which we're gonna do also together. So that
Yeah.
should be fun. I'll be
Okay.
doing the questions this time.
Yeah. Yeah. I'm going to be doing a 4-day event. I did it last July. I'm going to do it every quarter now this year. It's going
Okay.
to be every quarter, the second month of every quarter. So talk to the marketing team today. We're going to get it together and we're going to start promoting it next Wednesday. It's going to
Awesome.
be the last week of March from Monday through Thursday. Last year, we had 532 people sign up.
Wow. Oh, I
100,
remember that.
yeah, yeah. So we're doing that again. Okay, I'm going to change the slides around a little bit. Some things are has been changing within the VA, which doesn't surprise me. Which a lot of veterans do not know because a lot of times I don't talk about what I used to see was inside the VA because that's going to distract people from the real prizes, staying focused on their particular claim. Okay. So I'm going to be talking about some things, but I'm going to be doing that throughout 4 times throughout the year. And I got a big surprise for you for all you veterans, active duty service members on Veterans Day. I'm not going to say what it is, but yeah, you're gonna like it. I think we got something. Want to make sure we don't miss anybody. California does very need a lot of money for cost.
Oh, so closing costs on average across the country are about 2 to 3% of the purchase price. California is expensive, right? So if you're buying $1 million place, like yes, closing costs are going to be like 20. They're going to be about $25 to $30,000. But again, that's $1 million property, right?
So if you're moving next to Kim Kardashian, you probably about what 100,000 closing costs.
Yeah, probably. Like this, just I wouldn't recommend it.
Yeah.
So, but again, everyone play. But again, just to kind of like close things out. If you go with the big banks, number one lender that's out there, you're gonna be paying even more. So you're gonna be paying
That-
6%. Yeah, you're gonna be paying a lot more in closing costs. So, just kind of keep that in mind. But yeah, a lot of the places on average it's 2.5 to 3%, 2 to 3% depending. So.
Okay. All right, everyone. Definitely appreciate you chiming in. Dave and I, we're going to be doing this every month. We're going to pick a topic and discuss it, take some questions. I am so happy. I think 99.9% of the questions were VA home loans. So definitely Dave is here to help. I put his contact information in the comment section. If you don't see it there, make sure you go to the description section of this video and you'll find his contact information there. So thank you for attending. Make sure you go out to his YouTube channel, VA Housing Education. Hit that like, subscribe, and notification button so you will know when he goes live. Thank you, everyone.